Welcome to Beyond the Box, Unlocking Creative Mortgage Solutions. I'm your host and creative financing expert, Brett Clark. This podcast is for realtors looking to offer more to their clients and loan officers seeking new knowledge. We'll dive into non-QM loans, creative strategies, and trends to help you grow your business and serve clients better. Let's unlock smarter solutions and build stronger partnerships along the way. Ready? Let's get started. Hey everyone, and welcome back to Beyond the Box, Unlocking Creative Mortgage Solutions. I'm Brett Clark, your host, and I'm so excited about today's episode because we're going to talk about a topic that is hitting close to home for so many people that we're helping on a day-to-day basis. It is financing for our self-employed borrowers. Now, we know that traditional lending can feel like a brick wall for both us and for our clients. We don't like it with their tax write-offs, fluctuating income, new income for influencers, and the endless paperwork that drives all of us mad. But non-QM loans are changing the game and creating wonderful opportunities for those that we want to help. Today we're going to talk about why self-employed borrowers struggle with conventional financing, the creative solutions that we can offer, and some real-world stories that I have that we can put all into practice. So let's get started. Let's start with the problem. Why is it so hard for self-employed clients to get approved with traditional loans? Well, the biggest hurdle, as we all know, is the tax write-offs. Self-employed borrowers are great at reducing their taxable income, which is so smart with not having to pay the federal government or the state government with those things. But it really makes it harder for us in the mortgage industry. As lenders, we look at net income on self-employed after deductions, and for many self-employed folks, that number just doesn't really reflect their actual earning power. Another issue is fluctuating income. Underwriters are not fans of fluctuating or variable revenue streams like seasonal businesses, side hustles, or income that changes from month to month. Conventional loans like stability, and irregular income can be really tough to underwrite and can really cause some problems. Finally, the documentation is overwhelming, to say the least. Traditional underwriters often ask for 2 years of tax returns, profit and loss statements, other paperwork, all the things that could open cans of worms when we get into the self-employed space. Even with that, it's not uncommon that self-employed people can fall short from the traditional guidelines. This is where non-QM loans step in to offer real solutions for these clients that want to buy homes just like everyone else, but don't want to have to pay the taxes and use the benefits of being self-employed. So what makes non-QM loans so powerful? Let's break it down one by one. First, we have bank statement loans. Instead of using our tax returns, we're going to use their 12 or 24 months of bank statements to really calculate their income. This is going to be based off of what the deposits are into their bank account instead of what is being written off or not. And then we're going to use an expense ratio depending on the type of business that they have, or just a fixed one at 50%. This is the power of bank statement. Recently, I had a client whose business generated $500,000 annually, but after $450,000 in write-offs, his taxable income was $50K. This was not enough to qualify for a conventional loan with the other things, but as we can clearly see, this doesn't show his true purchasing power. But with a 50% expense ratio, we calculated $250K in income, and he was able to buy his next primary home. This is phenomenal, and this is true power inside the lending space. Another one next into my favorite categories is asset utilization loans. These loans allow clients to qualify based off of liquid assets or even assets inside 401ks, brokerage accounts. Some even allow crypto. And so for people that have funds in crypto that are growing as Bitcoin has been going, this could be a huge benefit for those people. This is perfect for high net worth self-employed borrowers or people that just don't have that conventional source of income that is coming in but has a 401k, like social media influencers. Those type of people that are making money quick have the money now, but they don't have the past history of income. For example, I've worked with influencers who've recently started making significant income through brand deals, sponsorships, online platforms, While they might not have years of income documentation to show, their substantial savings or investment accounts can qualify them under these asset utilization guidelines. This is huge. This allows the lender to use the borrower's assets and divide them by a set term, let's say 36 months, 60 months, some are 120, to calculate qualifying income. This could be substantially more. This is a fantastic option for clients who are asset rich and experiencing a rapid income boost, but don't have the long-term verification for traditional loans. Lastly, we have the ITIN loans. The people that have their ITIN numbers and pay taxes here in the United States, but don't have social security numbers. These people can still buy homes, and we should allow them, since they're working, they're paying taxes, they should be able to have homes inside the United States as well. This is another one that fits into that category of allowing people to buy homes by American soil, and we love these clients as well. Let me share a couple of stories that show how these loans work in practice. First, the bank statement loan that I mentioned earlier, a client who couldn't qualify with tax returns but was able to use $250K a year in income using business bank statements. That's a perfect example of how non-QM helped a self-employed borrower overcome tax write-off hurdles. Another example includes a high net worth client that I had who didn't want to spend the weeks pulling all the income together and going through all of the cans and worms that would come up through all of the different items in his tax returns. By using asset utilization, we qualified them so much quickly, closed earlier, and saved so much time on stress. And for us and for them, this was invaluable. So how can realtors and loan officers help self-employed clients navigate these opportunities? I've got a few tips for you. First, educate your clients about their opportunities. It's not all conventional, FHA, VA, or USDA. There are so many other options for these self-employed people. Many self-employed borrowers don't even know that the loan programs exist, and it is up to us as the loan officers and the realtors to educate them on this power. So if you want to go for bank statements, let's prepare a list of assets or a list of bank statements that we could use up front so we could have that power up front. Second, working with lenders who specialize in non-QM. For the realtors out there, make sure that you have a partner that is really good at conventional, and that's great. You have your person to go to for first-time home buyers, somebody you have for your investors. Make sure you know somebody that you can go to with self-employed or non-QM loans. These loans require a different approach than the conventional ones, and partnering with experienced lenders can really make the process smoother for both you and your client. And we know that when you trust us, your lenders, you're trusting us with your paycheck, but you're also trusting us with your reputation. And lastly, position yourself as a resource for self-employed borrowers. Whether it's sharing information about bank statement loans or simply explaining how asset-based qualifications work, your knowledge can really set you apart in this hugely growing market. So let's wrap it up. Non-QM loans are a lifeline for self-employed borrowers who don't fit traditional lending box. With options like bank statement loans, asset utilization, ITIN, foreign national, or DSCR loans, we're really growing that pathway to home ownership or investment potential. So, at the end of all of this, if you found this episode gave you some new insights, please share it with a friend or a colleague who works with self-employed clients or would like to work with self-employed clients. Together, we can unlock more opportunities for people who are out there making things happen. Thanks for listening to Beyond the Box, Unlocking Creative Mortgage Solutions, and I'll catch you next time.